Hello guys and welcome back to another post-market analysis of Bank Nifty and Nifty. In this video, we are going to cover uh, the way Bank Nifty has performed today, and let's see if there is any key takeaways from this price action of Bank Nifty, and we'll also do the same for the Nifty as well. And after that, we'll also, since this is the last working day of this week and tomorrow is holiday, you can see that from here, this timeline. Today is March 7. As you move your cursor across, the next working day is 11. So tomorrow is holiday on the occasion of Mahashivratri. So today, let's also, along with our post-market analysis video, let's also do a weekly special content, that is analyzing the weekly chart on both Bank Nifty and Nifty, so that we can be prepared for the coming next week about the Bank Nifty and Nifty. So starting from today's price action, so here we are on the Bank Nifty start, and this is 5 minute time frame of Bank Nifty. As you can see here, it's 5 minute time frame. So Bank Nifty has started from here. Okay, so this is the first candle of the Bank Nifty. So from there, if you've noticed, this is the second reaction. Okay, but if you notice, there is there is this swing reaction which is close to the today's this swing reaction. So what you do is, whenever you see that, you try to draw a trend line based on these two reactions, like this. Okay, so you do that. So what happens here is, when the Nifty third time came to the same place at around 10:20. Okay, so let's not consider this candle as a breakout. Let's not consider this 10:15 candle as a breakout. Let me draw that and show you here. This is not a breakout candle because you have not seen another confirmation candle after that. Instead, what happened is, these two candles uh, has given us an indication of a candlestick pattern called dark cloud cover. So these two candles we're talking about. So we're talking about 10:15 5 minute candle and a 10:20 5 minute candle on a Bank Nifty time frame. So in order to call this as a dark cloud cover pattern, what we need is, we need and a previous trend. Of course, we do have a previous trend here. So here, this is a previous trend which is moving in an upside direction. Okay, so now what do you need is your second candle. Your first candle is obviously green. Your second candle opening should be above your first candle's close. So let's carefully zoom in and see. Here you can see that there is a gap up opening from this close. So this is the close of the first candle, but the second candle opening is a gap up candle. And what's your next criteria is, you need to see a close of this red candle beyond the 50% mark of this. So if you approximately draw this as your 50 percentage of your entire body of this first candle, you can see that there is a close under that. So this is confirming us that this pattern is a candlestick pattern called a dark cloud cover. Dark cloud cover. So this is a reversal pattern. So what's the second important thing here is, your second thing is your location. Let's take a look at this candlestick pattern where it has taken shape. It has exactly taken it's exactly taking place at this trend line which you have drawn based on these two reactions, that reaction and this reaction. Don't worry if you're going little detail into this video, because anyways, we have a good a weekend. We have a long weekend, and also let's try to learn maximum from today's price action, at least one on this particular pattern. And if you don't know what a dark cloud cover is, and if you want to know what it is, okay, with a greater detail, we have a video dedicated on that. I'm going to pin that towards the end of this video. You can see there to learn more about this pattern. So this is a reversal pattern which is coming after an uptrend. So a reverse for an uptrend is going to be the downside. So here we have a candlestick pattern, and also second thing is, we have this coming at an important location which is at this trend line. So we know the trend lines are going to act as support and resistance, right? So here, as you can see, this is coming at this trend line. So after this, it's okay to redraw, readjust it a bit. So don't consider this as a solid line. Instead, consider this as a band. Okay, so now if you just after this candle, if you just slightly move this trend line in order in such a manner that it is touching this, okay, so it's okay if you're barely touching this because it's you're almost there. Okay, so in order to satisfy that, you can also do this. You can also move that side. So now you are touching that portion, this portion, and also this portion. So after this, some might have worried that, see, this candle of the dark cloud cover pattern has a lower part as a rejection. This wick is telling that it is rejecting from that level. It's okay to be skeptical about it because our candlestick pattern, even though it is looking it's a bearish sign. So this would have bothered many of us. That's okay. In such scenarios, you don't have to force yourself to get into this trade in order to make money. It's okay to wait and see until you see a proper confirmation. So proper confirmation has come where at this candle in the form of a bearish engulfing pattern this time. So if you notice these two candles put together, that is your 1025 candle and 1030 candle. This is called a bearish engulfing pattern, which is again a reversal sign, and this is in the favor of bearish momentum. And this time, see, your first point is that, and your second, oops, excuse me, yeah. So here you have a dark cloud cover and uh, that is coming at an important location, right? So your next thing is this, which is not dark cloud cover this time. Instead, this is bearish engulfing pattern. And also you have location. So you have two criteria, you have two parameters now which are telling you that it is going to be a, a bearish momentum. And also this time, what you can also add here to this pattern is, this is the second pattern, okay, coming after dark cloud cover. Okay, so you can also add that. So you have a bearish implications, okay, two times at this level. One is this and the second one is that. So now if you take a trade there, where should be your stop loss? Your stop loss should be right there. And now where should be your target? Your first target should be there. And now if you pick this tool, which is a short position tool, and if you just place it here, and if you readjust this just to that level, which is your stop loss, and this to this level, which is your target, in this case, this is telling us that your risk versus reward ratio is more than 1. Here it is 1.44, which means it is also adding to the fact that you have another reason to get into this trade is your risk versus reward ratio. How much is your risk versus reward this time? It is 1.44, which is greater than 1. So this is also adding to this bearish strength. Okay, so one might have comfortably made this starting from there. Okay, so from there to here, it's 75 points. It's okay even if the momentum is small or big, you would have captured that momentum. So some might have been thinking that it's a small momentum. It's not about how many points you make. It's about how good your strategy and how good your technical analysis is behind that particular trade. You know that there's no fault with this trade, and you cannot say that this trade is going to 100% work. That is why we have stop loss. We have stop loss here. Okay, we had our stop loss there. So in this case it worked. Okay, in this case it worked. So and for any trade for that matter, you cannot say that, even if you have too many of confirmations going by your side, you cannot still think that the trade is going to 100% work. That is because anything can go wrong. Okay, anything, any buying pressure may come in, any, if you are towards the put side, and any selling pressure may come if you are towards the call side. You cannot predict 100% what's going to happen, but you are following these set of candles, and you are taking action according to what market is saying you this time, instead of predicting it. You're just understanding by the language of candlesticks. Okay, consider these candlesticks as alphabets of the stock market. So if you know what a piercing pattern is, what a bear engulfing pattern is, and if you know how to draw a trend line, and if you know if that's a, a, a trend line that is supporting the downside momentum, or it is a trend line that's supporting an upward momentum like this. Okay, so if you pay attention to the live markets, okay, and if you carefully, if you see, it's all about waiting in the stock market rather than jumping into every one of these candles. Okay, so that is how you could have made this you could have made this momentum today. And also, one might have also gone by this method, where this is your previous day's support, that is your recent support swing low, which is still in intact, while you are coming from, you're opening towards that direction. So one might have taken a trade there, a call trade there. There is no wrong. Okay, one might have also taken a trade there with this as the target. Nothing really wrong. But eventually, when you are here, okay, you are at the lowermost boundary of your this region, the support region. At least there, what you should have done is, you should have taken a call there, which is a good. There's nothing wrong about this, but where should be a target this time? It cannot be all the way. It cannot be all the way till there. It cannot be all the way till there, because you have this trend line which is sloping towards the downside. So now your target should be that. So one might have also made this captured this momentum, if you have if your analysis is following on this swing high and lows, even that worked. And in that case, one should have uh, made a momentum of say 112 points, which is good enough. So after that, where is your next where is what happened in the bank nifty after that? Let's see. If you look closely now, I'm just moving this text away. Okay, so now if you notice carefully, when the bank nifty is there, it has seen some trouble here at 11 o'clock candle, and after that you have seen a very small 11:05 candle as a bearish candle. But that's not good enough. It's not representing any candle reversal pattern by itself. So it's better to wait. So where is your next bearish implication? So now what should you do is, you should readjust this in such a way that it's touching all these lines slow, in order to be a little perfect. So now if you notice, one might think that, see, this is a breakout. No, it's not, because you need to see a candle getting close marginally a little away from this trend line, because you remember, this is not just a line, it's acting as a zone. So don't consider these slightest closes above this trend line as a close. Okay, let it come out a bit. See, once if you see a close there, and if you see another close there, then it's fine. But in this case, it's not. This candle is, to be on a safer side, it's not good to consider this candle. So after that, if you notice, you have seen a green candle, but after which, okay, you could have gone long if you have seen another green candle there, but that's not the case. Instead, you have another bearish engulfing pattern there. You have another bearish engulfing pattern there. But do you want to pick a trade there? Uh, yes, why not? Okay, but for that, you also need to readjust it a bit. Okay, so now if you see, these two candles, these two portions are not really touching this trend line, then what good is this trend line now? One might ask that, right? Instead, what you can do is you can bring that and keep this as your starting point this time, and make sure that it's touching this. So now you can see that it's touching a couple of these wicks on the top, and also it's touching this. Now, you can look towards the downside, and here it's a bearish engulfing pattern. So starting from there, where should be a target? Your target should be that, or your target should be this. Okay, so it's very close to this. Okay, in fact it did touch this line, it did touch this reaction. So this wick portion is always a questionable aspect here. So sometimes your moment is going to come down all the way towards the lowest point of your wick area. Sometimes it would come just there. In this case, it's just there, after which you have seen another bullish engulfing pattern here. Okay, so this time again you have seen a breakout at Bank Nifty trying to come out of this, but again you have seen a red candle, and this time it's a harami candle formation, which is an inside candle formation. See, we are talking about these two candles. We're talking about 1235 candle and also 1240 candle. Okay, so that's a harami candle formation, and you have seen a breakout, kind of. It's not really breakout. Okay, let's closely watch this. So that's the lowest point of these two candle lines, and you have not seen a breakout. So there's no point. But one who has taken a trade based on this candle by itself should have definitely kept the target only till this level, and see that level is achieved. So that is how uh, this this portion of the Bank Nifty could have been traded. And see, where is okay, so now you have this reactions coming out, and this is little in. So now what you should do is you should readjust your trend line. Okay, you should keep on working your trend lines based on your price action. So now here, this is fairly enough. Okay, so here you have one, and this is barely touching this and this. So you have three times touching. Even if it's not touching, it's fine. You have a contact made there, and you have a contact made here. So now what would you do? Okay, now this is a proper uh, breakout from that with a proper confirmation candle. So now one might have taken a, this is a good sign to look towards the upper side. You are at 1.5, but look what happened. It has, okay, so now if you want to measure this momentum, that's the lowest point, and the same should the same momentum should be seen after the breakout, but it didn't happen. Okay, so you have after this you have uh, momentum. From there it struggled. So from there again it has seen a pullback. But here at this is the place where you should be really careful about. That's because, for a couple of reasons. See, one thing is, if you look on the left, this is the place where last time we have seen a struggle. Okay, Bank Nifty struggle there, and from there it has seen a momentum towards the downside. See, this is a very powerful candlestick pattern called a shooting star, which is a reversal sign, which tells us that the market wants to go towards the downside. So one who is closely paying attention to this swing reaction, and also those who know that this is a shooting star pattern, could have safely exited their positions there. Okay, so from there you can see that travel is real towards the downside. Okay, so that's it about the Bank Nifty price action. uh, based on today's market action, today's on based on today's market behavior. So now, in order to understand how Bank Nifty is going to perform, let's now jump to our daily charts first. After that, we'll get into our weekly chart. So here we have the daily chart. So if you are following us from last few days or last couple of months, you know that right from the moment we have seen this gap, we have been continuously talking about this gap on a daily time frame. So now we know that the gaps are going to act as a support and resistance. So since this gap is towards the upper side, and we have all this momentum coming from the downside, this is going to act as resistance. But what did we spoke recently? 2 days back, we were discussing and we said that, see, after this breakout on March 4th, we said that now it may eventually go towards this level. Okay. And that is what has happened. See, yesterday is the first time that we have touched this level after January 16th. Okay. It's 10 days less than 2 months. We are just 10 days less than 2 months, and this is the first time activity again coming to that place. And yesterday we have discussed that now here at this point, if you see any here at this location, if you see any red candle after this candle, especially, there is a chance for the bank nifty to go towards the downside. But yes, this is a red candle, but it's slightly bearish. But if you see the same red candle getting close beyond the half point of this entire green candle's real body, then that pattern itself is going to be a reversal pattern called the dark cloud curve. But this is moderately bearish. It's not very strong, a bearish sign that you want to trust and you want to go towards the downside. Okay, for that it's always better to wait and watch what's going to happen after this. Now again, if you see that, if you see another a red candle in this zone, then based on that we'll take some decision. But as of now, it's looking moderately. Yesterday it was definitely bullish, and yesterday we discussed that it's at this resistance area. So in order to be bullish, we need to see a breakout from there with a proper confirmation candle. But if you want to go towards the downside, then in that case this entire range is going to act as a support for the bank nifty while it's coming down. Okay, so let's wait and watch what's going to happen. So on a daily chart, it's not bullish and it's not bearish. It's moderately little inclined towards the bearish side, but we need to see a confirmation candle after that. So now let's remove this and let's change our chart time frame to 1 week. So here we have the weekly time frame of bank nifty. So now here we have this trend line intact. Okay, so here again, this trend line is a valid trend line based on these swing reactions. We have seen this trend line is been intact for more than 3 times, so it becomes a valid trend line. So now what you need to pay attention to here is, see, in our last weekly specials video, we have discussed that here this green candle after this red candle, this green candle's real body is within the real body of this red candle, so hence it became an inside candle formation there. And after that, you have another red candle within the real body of this green candle, which is also a inside candle formation. So this is inside candle formation, and this is also inside candle formation. That is your harami pattern. So you need to now wait and see which side is the breakout happening. So that's your uppermost level of your harami pattern, and this is your lowermost level of your harami pattern. So now last week we discussed that, see, since it has seen a breakout from that range last week, in our last week video we discussed that now there is a chance for the bank nifty, and we discussed that the bank nifty on a weekly chart is bullish. And from this candle you can say that yes, it was bullish. But where's your target? Your target is somewhere there. It's barely near your target. It's barely near your target. So keep in mind that this entire range is going to act as a resistance area for the bank nifty on a weekly chart. But it's looking decently bullish on a weekly chart. But on a daily chart, it's better to wait and watch for at least one more day in order to come to a conclusion about the momentum. But since we are very close to this range, we cannot be aggressively bullish here. Okay, because you are very close to this resistance area. So now for the next week, yes, it is looking decently bullish, but you may also see some pullbacks. Be prepared for that. Okay, so but for any reason, if you start to see momentum towards the downside, then this blue line is going to act as little support area for the bank nifty. But the major support is definitely going to be this blue trend line. Okay, so that is how for the bank nifty is on a 5 minute time frame. Based on today's transaction, we have seen the important and moments how that should have been traded. And on a daily time frame, we understood the bank nifty, and on a weekly time frame also, we have discussed how bank nifty is looking on a major trend. Okay, so I'm removing all this. Let's now change our time frame to 5 minutes and change our chart to the Nifty so that we can see how Nifty is today. So here we have the Nifty's chart, and right from the beginning, you can say that it's very tight. It's in a perfect box zone today. Nifty was struggling to go up, and it was going in both the directions for some time. But at the end of the day, it's definitely a good sideways market today for the Nifty. Okay, but if you see, this trend line is coming from yesterday. So yesterday we have drawn this trend line based on these two reactions, and from after that, when you see this as your target, okay, sorry, when you see this as your third time reaction, so from there you have seen a momentum. Also, you have also yesterday drawn a trend line like that towards the downside, and if considered this breakout as a valid breakout, so from there you should have seen a good momentum. Since yesterday was a pretty good trending day towards the upside, traditionally there needs to be some correction. That is why here you can see a lot of sideways action happening at the Nifty. So if you notice here, at the same reaction, taking this as support, it has reached this high. Okay, but again at that resistance, you have seen a red a candle there, but this time it has taken support at this trend line which is coming from there. So there is nothing much to discuss about the trades in the Nifty as it is going towards the sideways market. But still, you should be prepared enough for today. See here, you have definitely this reaction. Based on this, you should have drawn that, and based on this breakout, which is failed breakout, and then you have seen a green candle getting closed above that. This could have this momentum could have captured. There was opportunity there, but the momentum you have seen the moment you have seen this, because this is a swing reaction, now that becomes resistance. And here when you saw a red candle, now you see that can come either till there, or it can quickly reach here. So here you should have exited, and after there's no point in taking a trade there, because you see this could have only been your target. So there is nothing much happening in the Nifty chart on a 5 minute time frame. Let's quickly change this to a daily time frame of the Nifty and see. So yesterday we have seen a breakout from that, and today we have seen Nifty coming back and testing this level exactly. So until Nifty stays above this blue line, you need not worry about the market falling down, as it is acting as support. But for any reason, if you see breakout and a proper confirmation candle after that, then you may you should hold for some time, because you have a couple of swings there. See this is your previous one of your previous swings, which might act as a strong support. But if that breaks, and also if this breaks, that's the only scenario where you should be worry about the Nifty falling towards the downside. Otherwise, it's still looking decently bullish above that. Only the fact is, this if this was a green candle, then it would have been like, we can say that it's aggressively bullish, but right now it's not. Let's see what's going to happen now. So, and this doesn't mean that see, until you come below this, you're not supposed to be towards the downside. But here, your overall major trend is looking towards the upper side. But this could be your small resistance now, and you can very clearly see that why it's resistance, because we are at a milestone. Okay, we are at our 22,500 level, which is a round number, which is a resistance by itself in the Nifty. So that is why we are seeing a little resistance. So let's see how whether it's going to give us a breakout above this level, or whether it is going to give us breakout towards this level. So that is how Nifty is looking on a daily time frame. Let's quickly change that to our weekly time frame. Yes, last week we have last week and the week before that we have discussed that. See, we have seen a breakout after that, and we said that on a weekly chart, Nifty is looking very bullish, and here it was bullish. And last week again we said that Nifty on a weekly chart is looking bullish, and again here it's a bullishness of the Nifty on a weekly chart we can see. But now it's very close to the 22,500 level. We should little careful. You should be a little careful about that round number for the next coming week. And also, as we are raising further, okay, it's healthy to see a pullback towards this level. And if you see a proper rise from there and a breakout from there, then you can expect Nifty to do wonders in the coming weeks. But uh, yes, on a weekly chart, it's looking bullish, and on a daily chart, you should be little careful, just like the Bank Nifty. Okay, so both Bank Nifty and Nifty both are looking bullish on a weekly chart, and on a daily chart, you should be little careful to see more confirmation. But this saying that these are bullish doesn't mean that it's going to start rising from the day one in the next week and till the next weekend. That's not going to be the case. You should always pay attention to your intraday charts, your real, okay, in the real markets, in the real life time frame. You should really play pay attention to your new swing highs, your recent swing lows, okay, your recent swing highs, okay, your fresh swing lows for the day, your fresh swing highs for the day. You should pay attention to all this and trade accordingly. So those weeklies and dailies time frames are there just for you to understand what's happening on a larger time frame, but that doesn't really going to give you money in an intraday format, because most of us are intraday players on a 5 minute chart, on a 15 minutes chart. So that's not going to help you. Your weekly charts are not going to help you, but keeping that knowledge, having that awareness of the Nifty and Nifty on a larger time frame, definitely going to help you, okay, to take trades towards the major trend if you are that kind of a trader. Okay, so that's it, guys. That's it for this video. And since you have a 3 days weekend, wish you a happy weekend, and also be please be uh, patient enough to do some backtesting in the markets. Only that's going to make you little confident. And the real secret with the stock markets is, if you are a new trader especially, learn as much as you can. See, in this channel we are not focusing primarily on any indicators. Here we are focusing on a pure price action and trying to learn uh, everything based on price action, that too by picking that particular day's chart. Okay, so try to learn as much as you can and try to do backtesting as much as you can. Until you do that, I suggest you not to uh, increase your lot sizes. Okay, do paper trading for 3 months. If you are profitable, then come to the live trading and trade with only one lot. And if you only if you are profitable for the next 3 months with one lot, only then try to increase your position sizing. Okay, so there's no secret mantra in the stock market. The only mantra is you gaining the knowledge whatever that's necessary. You cannot learn stock markets in 1 hour, 2 hour, 3 hours videos, or not just by playlist. Okay, not just in our channel. If you are in that kind of thinking, okay, you please, I suggest you to come out of that, because that way, that's not the right way to learn. Okay, the one that can help you gain knowledge and be ahead of be a step further than your other traders. But what's really going to help you is treat trading uh, as your life profession, and then spend time in the live markets. Okay, learn from the live markets. That's the only way for you to learn. Okay, sorry for making such a long video for the long weekend, but I hope it helped you learn and realize something uh, new in this video. Okay, so see you guys, see you in our next video. Until then, happy trading, And please don't forget to do the back testing. And if you haven't subscribed to our channel, forgot to ask and mention this. uh, if you haven't subscribed to our channel, please consider hitting that subscribe button as well. Thank you. Thank you so much.